and other issues that they face, and particularly helpful, of course, with VAT, not only within the EU, but also more widely as VAT becomes an issue more globally. Property is one of the Gravita's leading sectors, along with technology and financial services. But we have a very large amount of experience in dealing with property. We've got over 4,000 property clients, ranging from the guy with a £250,000 property that he rents out to billion-dollar property portfolios and developments owned by everything from everywhere, doing everything you can imagine with property. So we would probably hold ourselves out as experts in advising clients in the property industry. Please reach out to Sandy after the event with any questions that you might have. If you have any other tax related queries, myself and the rest of the tax team would more than happily help you, and particularly with things like cross-border work, conflicts, M&A, transactional work, international, and of course the wider Gravita team where there might be conflicts, so that we can support you with audits or valuations and so on and so on and so on. We really are here to help. But during this particular presentation, if you do have any queries or questions, particularly about what Sandy is going to be talking to you about, please drop those questions into the chat, or otherwise after the presentation, reach out to us directly and we'll do what we can to help. Right, so that's enough from me. You'll be pleased to hear. I'm going to hand over to Sandy Cochrane. She's Gravita's head of VAT, and she can take you through the presentation this morning.
Thank you, Tom. Well, good morning again and welcome to everybody. The aim of this morning's presentation is to provide you with an overview of the construction industry scheme when the domestic reverse charge applies, and to navigate through some of the terminology, enabling you to gather the relevant information for your clients, which in turn should enable the correct guidance to be provided. This isn't going to be simple. You're not going to have answers at the end of the day, because every client and every situation is going to be different. So this is to help you guys as referrers, as legal professionals, to gather the information, understand the terminology, and at least have a bit of an overview and some knowledge to help you and your clients navigate through what can be a very complex area. So what I'm going to start with, as the slide says, I'm going to start with a bit of history. We're going to move on to explain certain terminology and go through the processes, explaining the domestic reverse charge, how that gets charged through the construction industry scheme. I'll mention a bit about design and build, and then finally we'll go through some problem areas that we've been seeing with our clients as we've been going through all of this. So the history. So for those that think this is something new, it isn't. CIS came in the 1970s, and it was a preventative mechanism to target tax evasion, and it was perceived to be more prevalent in the construction industry scheme than anywhere else. And the reason being is that back in the day, it was very common for construction companies to engage workers that weren't UK residents, and therefore paying them in cash, and VAT just getting lost in the whole supply chain. So this was one of the reasons why implementation of the construction industry came about. It's taken different forms since the 1970s, with the most recent version being introduced on the 6th of April in 2007. And then there's been some more recent changes in April 21. And for those legal professionals that are amongst us, the primary CIS legislation can be found within the Finance Act 2004, and it ranges or goes through the subsections 57 to 77 and schedules 11. And the secondary CIS legislation is contained within the Income Tax and Construction Industry Scheme Regulations 2005. I've put the legislative reference through this throughout the slides, just for reference, in case that helps as well. So we're talking about the application. Can the construction industry scheme apply to more than just UK construction businesses? And the answer is yes, it can. So anybody that is doing work or constructing in the UK, so non-established traders, as long as they meet the criteria that I'm going to go through shortly, they will be caught by CIS. So it doesn't matter that you're not a UK business, it's any business that's constructing within the UK. We talk about CIS, and what is it? Well, it's basically a type of withholding tax and a reporting regime that applies to payments from contractors to subcontractors, and it's made under contracts which include construction operations undertaken within the UK or the UK territorial waters. Territorial waters are those that are extending 12 nautical miles from the high water mark. For those that are familiar with VAT, the 12 nautical miles is quite a common use when we're earmarking territories. We're then looking at payments that are required to be included on a return made, and these are known as contract payments. And broadly, these are payments made under a contract for building works. And these are by a type of customer that the construction industry scheme itself calls the contractor, that are not excluded by statute from being contract payments. If a customer is not a contractor, then its payment are not contract payments. They do not need to be included on a CIS return, so neither construction industry or the domestic reverse charge, which I'll be coming on to later, applies. So it's quite important to understand from the outset what is actually being supplied, what the contract entails, and who the parties are. So we're going to go through some of the terminology. You'll hear a lot of terminology when doing CIS, so it's quite important to understand what that means and how your clients fit into the supply chain. So the first point on the slide there is construction operations. These are services to which the construction industry scheme applies and does include a wide range of work that can be done to permanent or temporary buildings even, or even land. So we're talking about site clearance, civil engineering works. And again, like I've said, the legislation is shown on the slide there. So CIS can never apply unless construction operations are provided. And when we look at the CIS rules and we look at the domestic reverse charge legislation, the wording is pretty much similar. So within the CIS, the wording is identical to that of construction services under the domestic reverse charge legislation, apart from the use of word operations rather than services, but they are the same. There is actually a very useful index of the type of construction operations and commentary on them that's provided by HMRC, and they've got on their website a construction industry reform manual, and it covers all types of work from the demolition to certain temporary structures. And again, it's a common misunderstanding that CIS doesn't apply to temporary structures. Well, it does. We're talking about, in the main, temporary structures like porter cabins, as an example. The construction contract itself, that is a legally binding agreement under which one person, normally the subcontractor, does work or provides services or labour to the contractor, which are construction operations. What's not included is an employment contract. So an employment contract is not a construction contract for construction industry purposes, and therefore construction industry scheme will not apply to payments made under or made to by contractors to those employees. And again, you see the legislative reference up there. So we continue with terminology, and we have contract payments. These include any payments that are made by a contractor to a subcontractor or another party, for example, someone that's been nominated by that subcontractor. So the payment that's made by a contractor to a subcontractor under a construction contract, it can include payments that are made in cash, check, credit, and even include payments that are going to be done via a loan. So even if a contractor is obliged to file returns and receive construction operations, the CIS can only occur on contract payments, and only contract payments are entered onto the CIS return. The definition of contract payments is quite wide. Any payments made under a construction contract is a contract payment. Any contract providing for construction operations is a construction contract. So many non-construction payments can get tainted by obligations to provide construction operations that sit alongside them in a contract. Therefore, care needs to be taken to perhaps ring fence certain operations or ensuring that contracts are scrutinised for such implications. So what I'm trying to say here is that you can have contracts that are talking about services that are construction in nature, but the contracts are very, very important to understand whether there's a possibility to separate them, if that's what we want to do, if for the client that's a more viable solution for them, or by including them together, because again, it's viable for the parties involved in the transaction. We've got the actual contract payment and certain elements that will and won't be included within those payments. So we've got certain material costs that aren't treated as being contract payments. The ones that are accepted are payments that are treated, as I mentioned earlier, those that are made under a contract of employment, and these are under the labour agency provisions. So when we're talking about services provided by an employee, they would not fall under the CIS. We've got other payments which can be reasonably taken to be the services of an individual, and where the provisions of those services give rise to an engagement to which the off-roll payroll working rules apply. We also have situations where payments are made where the person receiving the payment is registered for gross payment status at the time the payment is made. So there are special rules to consider where the recipient is a partnership. So again, understanding who you're talking to, what entity and what format they're actually providing their services through is very, very important. And then there are other payments that are specifically accepted by virtue of the income tax construction industry scheme regulations. And basically what that means is that the agency rules and the off-payroll working rules take priority over CIS. So if you've got an employee, you've got the off-roll payroll working rules, those need to be looked at firstly. So we then talk about amounts that are referenced to direct material costs that can form part of a contract payment, but are not subject to the deduction under CIS, but they nevertheless remain part of the contract payment for CIS purposes and count towards the expenditure thresholds for deemed contractors that I'll come on to shortly. So it's important to note that if a subcontractor recharges material costs that its own subcontractor has charged, then the recharge will not escape that deduction. There is reference within the legislation that talks about the direct cost to subcontractors of materials used or to be used in carrying out the construction operation. So again, breaking it down, understanding what the services are, understanding the types of materials, who's actually incurred the costs and how that is going to get passed on through the chain, again, is very, very important. So we talk about the deductions that the contractor must withhold in certain examples. So where the contractor makes deductions from payments to their subcontractor, the contractor must also provide the subcontractor with a monthly deduction statement, and that sets out the amounts paid and the deductions that have been made. And I know that HMRC prefer that the contractor provides these statements even when there's no deduction made, but HMRC do accept that it's not required, although in reality if you don't submit them, it can get a bit more difficult to explain to HMRC why not. And for those of us that are used to talking to HMRC, we know that it takes them 40 minutes to answer a call, let alone trying to explain why we haven't submitted a return. The amount of the deduction that the contractor must withhold and pay to HMRC will either be at the standard rate of 20% or the higher rate, which there is at 30%. We've then got the contractor. So in this scenario, a contractor is a party to a construction contract, and this can be either a mainstream contractor. So mainstream contractor is a business that includes the carrying out of construction operations, such as a construction business or a property developer. And these HMRC referred to, as I've said, as mainstream contractors. So a business is not a mainstream contractor, but where it's cumulative VAT exclusive expenditure on construction operations in the last 12 months exceeds 3 million, they are deemed contractors. And then we have other types of bodies that could be local authorities, housing associations, etc. Again, whose cumulative expenditure, VAT exclusive expenditure on the construction operations, again within the last 12 months, exceeds that 3 million threshold. So to be a main contractor, as I mentioned, the contractor itself is a business or other type of business that pays a subcontractor for construction work. Sounds quite obvious, doesn't it? But you know, as you can tell as I'm talking, it's all the nuances, it's terminology that we need to put into play. So the contractors, as I've said, may be construction companies and building firms, but as I said, there may be government departments. We aren't talking about private householders because they aren't contractors, and therefore they're not covered by the scheme. We then come on to intermediary suppliers. These are VAT registered and CIS registered businesses that are connected to linked or end users. If the intermediary supplies buy construction services and we supply them to a connected or linked end user, which we find in VAT groups, for example, and they supply them without making material alterations to the supplies, they are treated as if they're end users, and the reverse charge, the domestic reverse charge, does not apply in that case. So to be connected or linked to an end user, the intermediary suppliers must either have a relevant interest in the same land where the construction works are taking place, for example, a landlord-tenant situation, be part of the same corporate group or undertaking, and that notification of end user or intermediary status can be made, and that can be made by post, email, or even included in the contract. And this notification must be kept in the business records. The end user, for reverse charge purposes, consumers and final customers are referred to as end users. These are businesses that are VAT registered and CIS registered, as I mentioned, but do not make onward supplies of the building and construction services supplied to them. Again, the reverse charge does not apply to supplies to end users where the end users have said that they are that end user and they do it in writing. We've then got certain costs, so legal and professional costs that we talk about when we're talking about reverse charge. These are actually standard rated. And again, I'm going to mention this later on, but standard rated unless they form part of the design and build contract. We then have the construction services is subject to the domestic reverse charge, whereas a supply of staff only isn't. And the simplest way to tell the difference is the contract. As I've mentioned before, we look at, what the contract says, what that contract is for. So labour only construction services, the business will be supplying labour, will be responsible for overseeing the completion of the work, for example, carried out by the workers, whereas where there's a supply of staff, the customer receives the workers will be responsible for overseeing the completion of the work. So again, we're talking about the situation where we've got off payroll, or you've got the difference where you've got a contract to provide construction services through the right supply chain. So does the CIS only apply to UK construction businesses and property developers? The answer in short is no. As I mentioned earlier, any type of operation, whether it's overseas or not, where they are providing the services that fall within the construction industry scheme, they will also have to apply, and they are treated the same as if they were a UK business. Secondly, we've got the inclusion of deemed contractors there, which means that non-construction businesses and certain other bodies whose annual expenditure on construction operations exceeds the threshold, they will then fall within the scope. So deemed contractors may have to operate the CIS immediately after the threshold is exceeded or expected to be exceeded. And we're back to that, looking at the continuous rolling 12-month check on construction expenditure. So it's quite important to monitor that. The requirement to register is subject to a discretionary period of grace, but not exceeding 90 days at this current time. So we've got various obligations that contractors need to meet, and the first thing that we've got there is step one, register as a contractor. The timing of the registration depends on the contract type, but again, you get the advice, you understand that the mainstream contractors must register before for CIS before paying their first subcontractor. Deemed contractors must register only once they've exceeded or are expected to exceed that registration threshold. We've talked about employment status of subcontractors. So again, you need to consider that and whether or not the contract is one that does fall within the construction industry scheme. We move on to step three, and we look at whether or not the agency provisions or the payroll workers regulations apply. If they do, you stop there, you don't move any further. If the agency provisions don't apply, we then move on to identify the construction operation. So this is where the contractor needs to consider whether services being performed by the subcontractor fall within the construction operations. The construction operations themselves do include a very broad range of construction work, but it's broadly what we know as construction work, but including things like site preparation, alterations, dismantling, repairs, decoration, and demolition. So broadly what we're used to. So determining which operations constitute construction operations can be complex, and I know HMRC have provided guidance on their website there. So it's one thing to particularly note of importance is that if a construction contract includes both construction operations and non-construction operations, this is commonly referred to as a mixed contract, then the contractor will be required to report and apply the tax deduction. I think what I've got there is an example that may be relevant. So, example of carpet fitting in isolation does not fall within the definition of a construction operation, but if it's undertaken as finishing operation on a wider construction project or a single contract which includes other services, then that carpet fitting may actually fall within the CIS. So, you know, step 4 is quite important to follow. We look at CIS obligations, so we carry on with step 5 of verifying subcontractors. And this is where the contractor needs to verify each of the subcontractors' registration status with HMRC before the first payment is made to them. This can be done online, and HMRC will confirm whether a subcontractor is registered for net or gross payment status. The contractor doesn't have to verify a subcontractor if they've included that a subcontractor on a CIS return has been done in a current or previous 2 years. So basically, if you've already verified that contractor because you've been working with them, you don't need to do it every single time. We then move on to the deductions. So where the subcontractor does not have gross payment status, the contractor must do the deduction from the contract payment before paying that subcontractor. And then, as I've mentioned before, when calculating the CIS tax deduction, the subcontractor needs to know what is not treated as part of the contract payment. And I've mentioned materials before, and certain other costs that we need to exclude. Material costs can only be excluded where they represent the actual direct cost of the material. For certain plant, we need to look at scaffolding. So again, looking at who's hiring that and whether it needs to be included, and certain other areas. And we then go on to the final step 7 on the previous slide of submitting the CIS returns. So we move on to the domestic reverse charge. This was introduced on the 1st of March a couple of years ago, and the reverse charge is where the recipient is required to self-account for VAT. So in a nutshell, from March 21, the reverse charge means that a subcontractor in the CIS scheme will not charge VAT on its invoice to a VAT registered contractor in the scheme. Instead, the contractor will account for VAT on their VAT return as both outputs being sales and inputs being the purchases. So when we look at sales, if you're a UK subcontractor invoicing a UK contractor for CIS services, we don't talk about materials only type supplies. So on these supplies, VAT would normally be charged at either the standard or the reduced rate. You don't need to charge that, it will fall within the reverse charge. So on the invoice, you need to make a note to show that it's clear that the supply is under the domestic reverse charge and that the customer is required to account for VAT. There is no prescribed wording, but if you put something along the lines of reverse charge customer to pay that to HMRC, and you clearly state how much VAT is due under the reverse charge, or even just the rate of that, sufficient. But the VAT that's due shouldn't be included include that value on box 6 of your corresponding VAT return. So where the reverse charge applies, you should check and keep a record of VAT numbers, CIS status, and UTR numbers. When making purchases, again, as a UK contractor receiving invoices from subcontractors, you shouldn't be charged VAT. Instead, there should be the statement. So as I said, on the sales invoice, you will get a statement on the invoice saying that you are required to account for the VAT. So to account for the VAT, the figures go in both box 1, which is the deemed output tax on the sales, and the deemed that's calculated at box 4, which is the link is up there that shows you how you can verify your responses. HMRC see the design as a cost component of construction and not a separate supply. So quite an interesting point to note. I'm going to quickly go through some of the problem areas that we've encountered when dealing with some of our clients. Normally to do with direct payments. So when you've got various parties in a chain, you can have payments made from A to C, so leapfrogging the middleman of a supply chain, so that payment is made to the subcontractor directly to ensure that the money reaches that subcontractor. So, for example, if A is providing construction operations to B, who then provides them on to C, C may make that direct payment to A, in particular if there are any doubts on B's ability to relate that payment. So regardless of the cash flows, both VAT and CIS will see the construction supply chain in its complete form, although C has paid B and B has paid A. C in that situation must verify B status, and B in turn must verify A. So direct payments can be quite difficult, because when the times a party in the chain can suffer a bigger deduction than somebody else. So just be careful with direct payments. Another problem area is with own property expenditure. There is regulation 22 within the CIS rules that states that a deemed contractor who's in business and pays for works to be undertaken to their own property is not seen as a contract payment for CIS. So again, just be very careful when you've got clients that are doing work on their own property to determine whether or not it falls within CIS. The final problem area that we've encountered members of a group, you've got a diagram there in front of you that talks about holding. So you can see that A holds C 75%, who in turn holds F in that group structure 50%. The issue that we've got here is that when someone in a group member of a deemed contractor, we're talking about scenarios where we've got group members and we've got deemed contractors. So what this talks about is where two companies are members of the same group. If one is a 75% subsidiary of another, or both are 75% subsidiaries of a third company. We talk about the holding, and we're basically saying that where there's scope to include a company in which a deemed contractor only owns 50% or more of the share capital, we need to disregard it. So there's no express provision made for indirect ownership, but looking at that structure there, we then move on to looking at who the deemed contractor is in that VAT group, and whether or not the occupation of the B, C's and D's in that VAT group need to be considered for CIS purposes. So basically, going through CIS, going through terminology, understanding what your client's position is in that supply chain, as you can see from the slides, is difficult. It's important to understand, because then it's relevant to understand who is actually accounting for the VAT in the supply chain to make sure that that revenue doesn't get lost. In dealing with all of the CIS, and this is where normal people would plug their book. I haven't written a book, so I thought it would be nice to let you know of other areas that we can help, particularly in this sector. We've been helping a lot of construction companies with their importing regime, importing materials, so dealing with customs declaration service and postponed import VAT accounting. We've helped businesses with cash flow ideas, very simple ideas as well, even to do with paying landlords and just moving VAT return periods. So simple regimes. We advise clients on complex areas where they're doing mixed use sites or residential, commercial. We talk about making tax digital in the interaction. I think Tom may have a couple of words in a moment on that. And common areas where we've got intercompany recharges, how we can help with VAT, whether or not we want to have a VAT group and the advantages, disadvantages of putting those in place, dealing with non-UK property matters and invoicing. So very common misconceptions that we come up time and time again with in VAT, and absolutely happy to help on those subtopics. I haven't been looking at the chat, but I think hopefully questions are coming through, and I'm going to hand over to Tom to do the final wrap up here.
Hello, everyone, and thank you very much, Sandy, for a great presentation. A lot of very useful and very interesting stuff there. And just to remind everybody, if anything has piqued your interest or you've got an issue that is live that you might want to just bounce off of Sandy and the team, then please let us know. We are here to help. With that said, has anybody got any questions? I don't think there's anything in the chat as it is right now. Oh, and someone wants to put Sandy on the spot. Okay. All right. So again, if you do have any questions or any comments or anything you want to raise in VAT or any other kind of area of tax, then please let us know, and we'll do what we can to help. Sandy mentioned that I might have a couple of things to say on MTD. We do support clients through how to handle MTD. I'm sure many of you in the professional services world do as well. But if you do need some support, let us know. The future of MTD for private client is somewhat uncertain. They keep kicking it back. Watch this space, I think, is the best thing to say. Maybe Rishi and his friends will say something about it over the next few days, although I suspect not. Right, just to remind everyone, we're hosting a client webinar for VAT and the construction industry on Thursday, the 12th of October. We're going to follow this with some details. But please also check out our events page on our Gravita website. The details are on the slide, but gravita.com/events. In fact, just check out the Gravita website as and when. There's lots of really interesting stuff on there, he says, as he wrote some of it. Also, if you wouldn't mind just completing our feedback survey, it is really useful for us as a team just to know what is useful, what is interesting, what you would like us to talk about in the future, so that we can deliver what you're looking for rather than what we find interesting to you. Right, with all that said, last thing we'll say is thank you so much for attending, and I hope you found it helpful, and please get in touch if you need anything from us. Thanks very much.
Thank you from me too.